Hello everyone, my name is Ugo Obi-Chukwu. Welcome to Facts Behind the Figures by nairametrics. So the last time I did Facts Behind the Figures, I touched on trade, right? Nigeria's foreign trade data and what we actually import versus what we export. And I thought it was important to show a lot of you a bit more about the kind of things that Nigeria imports versus what we export, and where perhaps there are opportunities for some of you. And I hope that you get a lot of nuggets from there that should at least give you pretty much much better insight into Nigeria's trade data. So today and this time around, on the second edition of Facts Behind the Figures, I'm going to be taking you through what we use Forex for. Yeah, Forex is in the news. I'm sure you all know that. I mean, we've seen the exchange rate of the parallel market go, haywire over the last week or so, and understandably, a lot of people are panicked. Even the central bank is panicked as well, because people are wondering if indeed the naira is worth 570 something as some claim it is, versus the 410 412 that it's currently trading at the official I&E window, which is what the CBN likes to reference, also called the NAFEX window. Anyway, so today we're going to be looking at what we use Forex for, because at the end of the day, whether the exchange rate is 1 naira to $1 or 10 naira to $1, there is a reason why we always find ourselves in this situation, and it's important that everyone kind of understands why we're here and why this happens, and maybe that will give us a better insight into some of our challenges, our knack for Forex, and perhaps what we can do as a country collectively to get out of the situation. We all don't have to be experts to prefer solutions sometimes. Sometimes all we just need to do is just understand what the issues are, so that way when people who are meant to find solutions to these things start to work on it, then we can better understand what it is they're doing. All right, so I'm just going to put on my timer so that I don't run this beyond 30 minutes. Hopefully I can even do it much faster than 30 minutes. So are you ready? I am. So I'm just going to put this here, and here we go. All right, guys, so what we use Forex for, that's in Nigeria. What exactly do we spend our Forex on? What are those things that we typically buy with Forex, and then how do we earn Forex? That's basically what Facts Behind the Figures this week is going to touch on. So what do we utilize Forex for? So no country is an island, of course. Every country does business, so whether it's import or export, different things. Some countries have oil, like we do. Others don't have oil, and those that don't have oil, we export oil to them. There are some things that we don't have that we have to import from other countries. So countries across the world do that, and most times countries that sort of export more than they import typically have a more balanced economy, and mostly sort of advanced in terms of their the way the economy is set up. Even have some third world countries that do a lot more exports than imports. So when you do a lot more export than imports, you have what economists call a positive balance of payment position, but when you have a lot more you import more than you export, then they say you have you're in a current account deficit. Now, import and export in these terms is not like importing goods and services. It's not in all cases. Sometimes import here in these terms, in currency terms, export in currency terms, could be, maybe the things that we sell, goods and services that we sell, or, oil, export proceeds from oil, that's the dollars you get from selling oil. It could even be investors that are bringing dollars into the country. That, in a way, is some kind of export, even though in currency terms it's called capital importation. Now, so I'm going to be using this term, so just stick with me as I try to explain this. So, like I said earlier, countries that have current account deficit are countries that seem to have a lot more dollar outflows than inflows. Yeah, I think that's even a better way to characterize this. So dollar outflows and inflows. So when you have more dollar outflows compared to dollar inflows, then you would have a current account deficit. But if you have more dollar inflows compared to outflows, then you're said to be, in a positive balance of payment, or current, not rather than have current account deficit, you have a current account surplus. So countries try as much as possible to be in a current account surplus position. Now, when you're in a current account deficit, think about it. It means that you're going to need a lot more of your currency to fill that hole. So that is why you typically have currency depreciations. Countries that have, consistent current account deficit would always have currency depreciation. So think about it this way. So you and I do transactions. I buy 100 naira worth of stuff from you, and you buy 200 naira worth of stuff from me, right? So I'm net positive by 100 naira. So imagine if we were using different currencies, then it means you're going to need your own currency. You're going to need to give out more of your currency to get some of mine, right? So you need to give out 200 of your currency to get 100 of mine. So and because of that, I would typically have better currencies or stronger exchange rates. So a bit more complicated than that, I know, but that is all you need to know for now. So let's go into the data. So what does the data say in terms of current account deficit? Based on central bank data, as at 2021, we currently have a current account deficit of about $1.75 billion. You can see that here. And in terms of current account deficit for last year alone, we're at $16.9 billion. That's like $17 billion. Interesting thing is that if you look at here, oh sorry guys, let me do this again. I like to pull this up. Yeah, so that kind of helps the pointer. Now, if you see 1, 2, 3, 4, 5, 6, 7, 8, 9. For the last 9 quarters, we've been recording current account deficits. You see that? So when you have current account deficits, it's just inevitable that you have a currency depreciation. And if you all recall, you had major currency depreciations in 2020. You can see this here. We had a deficit of $6.3 billion and then $4.8 billion here. You see that? Now look at here, 2018. If you all remember, we had very stable currency in 2018, about 360 to the dollar, and that's because we had a current account surplus here, so positive balance of payment. And I'll try as much as possible to explain what happened between 2017 and 2018. You can see we're positive here. Remember when the last time we had currency depreciations, right? 2015, 2016, you guys remember? So if you look at here again, see it? See? Same thing, sometime in 2011 here. So most times when you have current account deficits, it's very likely that you're going to have currency depreciations, like I said, because it means that you have more outflows of dollars in your country compared to inflows. And when you have more outflows of dollars, then that basically affects your local currency. So I'm going to take you guys through why this has happened over the last few years, and maybe that will help you understand better where we are as a country. So this is Nigeria's exports proceeds. So how much we get from exporting goods and services, right? Goods, no, not services, goods here, goods. And in terms of goods for Nigeria, 2 main exports, oil and non-oil. And to be honest, as you can see from here, it's mostly oil exports, right? So this is the total export you have here. $97 billion in 2011, $94 billion, 95. And as you can see, it starts to get worse. All right, so this was about the time this government came in. So they've actually suffered severe loss of revenue since they came in. So you can see Nigeria's, export process has gone down almost by half here. And if you guys remember, this was when oil prices crashed from over $100 to less than $40 or so back then. And then it went on, and they started picking up in 2018 before COVID-19 struck. See what we did last year? $36 billion. If you all remember very well, oil price was even trading at negative at some point. And so, because oil is mostly where we get dollars from, right? Over 90%, as you guys can see. You see, out of this $97 billion, $94 billion was crude oil and gas. The rest is just electricity. Not that much in terms of exports of goods. And you can see not very nearly insignificant. Not a lot of dollars coming from exports from here, so not a lot. So that's over the last 10 years. As you can see, revenue has basically dollar earnings rather, has basically dwindled for Nigeria. So pretty difficult for this government to navigate through an economy that has very low, that has recorded very low export proceeds from crude oil and gas. 42, 32, 42, 50, like that. Nothing close to what we had in the first half of the decade, of the decade, that's between 2011 and 2021. So we'll go to a further breakdown here. So this here is services, right? Because we also import. So we try to look at, okay, so what exactly do we import versus, so here was what we export, and then here's what we import. And if you guys can see, in terms of actual imports, we have 52, 61, 51 here, right? You can see it hasn't really changed much. We still import a lot. Most of these imports though are also services. As you can see, services. Yeah, we do import a lot of services. I'm going to give you a breakdown of services later, but you see, we still spend a lot of money on services. So we haven't really reduced a lot of our imports. As you can see, still pretty much high in 2019, except for the what we had in 2020, but still pretty much high. Again, total imports very high. Hasn't changed much. $62 billion 10 years ago, $62 billion in 2019. Hasn't changed much. So while we've earned much less, as I showed here, we actually spent almost the same thing. So that's why you're seeing a current account deficit. But what exactly are we even spending money on? I'm sure you're interested in knowing. So let's go into that figure. So imports, right? That is what you have here. Okay. We import a lot of stuff, but the most significant part of our imports, as you guys can see, as you would see, right, are non-oil imports. But even at that, we do import a significant amount of crude oil and gas as is characterized. But this crude oil and gas you're seeing here is actually refined petroleum, right? Refined petroleum, because our refineries are not working. So we've been spending a huge chunk of money, $20 billion, $19 billion here, 19, 15, 13.8, just trying to sustain our, thirst for petrol. And this money goes out because our refineries are not working. So perhaps when the 𝗏𝗏𝗵𝗏 refinery comes on stream, you're going to have a lot of all this money perhaps saved. And that's why the government is seriously pushing for the refinery to come on board, but because this is just huge sum of money. Now look at other exports, our non-oil exports. Still huge. 45, 51, $30 billion, $25 billion. We still end up importing a lot of stuff. This is Q1 2021. So as you can see, still pretty much the same average. Hasn't changed much over the last decade. But in terms of what we've earned, it's actually sort of reduced. And this is just an example of the challenges we have in this country. So this particular chart speaks to goods, though I haven't even gone to services. So let's go to services, right? So services is high. I showed you this earlier, but this is just services alone. As you can see, it's actually even gone higher 2019. Still average, but still high, except for 2016, 2017, when we had Forex crisis, it dropped. And currently, as you can see, it's dropped. So whenever we have Forex crisis, how much we spend on services import tend to reduce. You know why, right? It does because so maybe you don't know why, but here's my own theory. When you have currency crisis like we did in 2015, 2016, the government reduces the amount of money we spend on servicing imports. And so people have limited dollars that they can access. And so a lot of the dollars that would typically come through the official market just to pay for services. Services can be things like even, airlines that come into this country and go out, how much they get from tickets and all that. So if you notice, it's usually very low, when we have currency crisis. And my guess is a lot of that money finds its way through, the alternative market, the parallel market, because CBN can't support everyone. So they go through those channels. But where we have a very solid economy and there's dollars coming in and out, then CBN can support, as you can see in 2018 and 2019. Huge sums of cash outflow, dollar outflow out of the economy alone in these years. Incredible stuff. We're going to give you a breakdown of the services now, and then you kind of understand what we spend money on. Oh, I need to put this up so that I can still time myself. All right, so services. This is services broken down. So I also broke services down for everyone. As you can see, the blue bar is transport, the orange is travel, gray is other business services, and then yellow is others, just other things. But focus on the blue, orange, and gray. So on travel alone, guys, on transport, $6 billion, $8 billion, 7, 8, 6. Again, remember what I told you about 2016, the years where we don't have money, when we don't have dollars. It's lower here, and then climbs back up, and then about 5. So we've been averaging maybe like $5 billion on transport. So transport is things like importation of buses, passenger travel, passenger cars, airplane parts, aeroplane, things generally have to do with transportation, particularly local transportation. That's where a lot of this costs go to. And they also include things like equipment that you use to service your transportation assets or equipment like vehicles. So we import a lot of this stuff. Think about it, motorcycles, a lot of these things, we import a lot of it, and that's why you have these huge sums. Now the next thing is travel. Travel basically is our regular travel, like medical consultancy, medical tourism, education, business travel, PTA. We still travel a whole lot. $6 billion, $6 billion. We still spend a whole lot on travels. $12 billion in 2019 alone. So for a country that doesn't earn that much dollars, can we really afford to spend so much traveling? And something else I look at I sort of think of when I look at this data is, when you look at how much we spend on travel, that suggests in a way that a lot of the dollars that we earn actually goes to the elites, you and I, right? If you're an elite, like I think we're all elite, so that's where the dollars go to. So in a way, some might argue that the CBN is probably subsidizing, the elites, the rich, the government. So when you see educated people, or people just go after CBN and all that, at the end of the day, It's actually you guys are subsidizing, strangely, right? Because I mean, it's not poor people that travel or spend all this money travel. They're not the ones who have children overseas or have families overseas or have to go on vacation. But this is just how much we spend on travel alone. It's incredible sums here. And of course, other business services like consultancy, financial services, and things like that also gobs a huge sum of our foreign currency. So I mean, between travel, transport, that basically takes most of the services that you see here. And if you can go back here, you can see that they all are in this non-oil dollar outflow that we record on a regular basis. So we're done with travel and transport. So something else as well. Investment income. Investment income is actually an outflow, right? Even though the CBN, classifies it as investment income. So it's basically people who invest in this country and need to get their money out in the form of, investments. So maybe dividend or FDI trying to get their money out and whatever it is. And that's a significant source of currency outflow for this country. As you can see here, it's pretty much high. It sort of dropped in recent years, and that is also because you've seen a lot of drop in foreign investments in this country as well. So not as robust as it was in early part of the decade, but still a significant outflow from this country. So this is into investment. I think in the last 10 years, outflows alone from all this, it's typically for investment income alone, it's about $149 billion if you sum up everything here. So that's the same kind of amount of money. Direct investment, income and equity, dividend payments alone, probably about $134 billion. That's if you sort of sum everything up. So significant amount of money, but most of it were in the early parts of the decade. So this is also another outflow from the economy. Transfers Nigeria earns. So these are inflows. So we earn a significant amount of money from inflows, and most of these inflows here are diaspora remittances. As you can see, that's what you have here in the orange column, but it's called workers' remittances. We suspect workers' remittances include a lot of the things that our brothers and sisters bring from abroad, from cash to when they bring in vehicles or when they bring in personal effects. All sorts go in here, and the dollar values, as you can see, quite significant. Average $20 billion, but it's dropped in recent years. And 2020 dropped significantly, and we're likely going to hit a record low again in 2021. 2020 was a record low, by the way, mostly because of COVID-19. I think we also face these issues when there are currency crises, as you can see in 2016 as well, and even in 2015, because I suspect people will channel their funds to the black market, so the CBN probably won't capture it, and that's what I think is happening here. But we do need these inflows to create the kind of forest liquidity that we need, that can give us a positive balance of payment, right? So guys, as you can see, we do need this. Then the rest here is just government investments, not that much, but significant enough to maybe help, but not so much like that. Significant enough for it to be reflected, but not so much. But in terms of the other sources of inflow apart from oil, as you can see, it's workers' remittances, and people say that perhaps brain capital is something that we need in this country. A good friend to 𝗪𝗵𝘁𝘀𝗀, 𝗪𝗵𝘁𝘀𝗀, chief economist of PwC, has often said we need brain capital is something that we should take seriously in this country. And this thinking is that if we invest a lot in attracting businesses that use the manpower we have in this country and the brain power, we're going to earn a lot of money, because we have a lot of smart Nigerians here, and a lot of us can work here remotely and bring that dollars in here. Or perhaps maybe have a lot of people go out there and they repatriate the dollar through diaspora remittances. So we do rely a lot on diaspora remittances, and imagine if this was like $40 billion or $50 billion, pretty significant. But at $20 billion, that's quite a lot, because if you compare it, so let's go back to oil and have a comparison. As you can see, oil here was giving us, it used to give us 90 before, but now if diaspora remittances is about 50% of oil at 54, so well about 40%, if I can use 40%, so quite a significant chunk. In 2019 we did 54 billion on oil and gas, and so if you go to 2019 here, where we you would see, yeah, you see, close. So important that we continue to encourage a lot of diaspora Nigerians to channel money into this country. Right, so bringing it all together now, this is, the very last slide. As you can see, like I said earlier, this is why we have a current account deficit. So it goes up when we have very good solid dollar inflows from sale of crude oil, and it starts to thin out in 2014 when crude oil crashed, and then this was when it really was bad. 2015 when oil really went down. Here we were still managing even though we're in a recession, and then we started picking back up. It thinned out again in 2018, and then we got into another mess in 2019. It worsened in 2017, and then here we are, the first quarter of 2018. And I also did this table here just to sort of sum it all up for all of you. So in terms of current account deficit, you can see it here. Exports, as you can see, net exports, which is exports less imports, and this is goods. We actually even haven't been doing well, even though we did well in terms of oil exports in the first few years of the decade, as you can see here. So this net here is import, exports less imports. As you can see, in the last few years we've been doing pretty badly because our oil revenues have basically dropped, and that's why you're having negative here. But in terms of transfers remain quite robust. You can see almost averaging $20 billion, but services is still a huge outflow, and net income still huge outflows. So in a nutshell, guys, the reason why we're in a currency crisis is because we don't earn enough dollars in this country. We just don't earn enough dollars. We haven't increased our dollar inflows in the last decade. We haven't done a good job at that at all. So whether it's government policies, or whether it's because of the way the economy is sort of wired or structured, I don't know, we just haven't done it, and that's it. So we got to do something to stimulate local economy, to allow us to compete better and import dollars. So whether it's the brain capital idea that Andrew Neville put forward, is probably what we should do. Perhaps maybe we should add a lot more to it. Maybe we should encourage a lot of investors to come into this country, give them the right policies and right incentive for them to come in here and set up shop, so that we don't have to keep importing a lot of the stuff that we can actually do here locally. But if you're going to compete globally, you just can't have that as a wish list. You've got to have an economy that gives people the right incentive to produce locally and then export. It's not when you want to export and you have your goods at the ports for weeks, right? Or you start to go through all the corruption that people say happens at the ports. No, we can't function that way. But this is the reality, guys. That's why we're in an exchange rate crisis. Yes, CBN has policies that are quite unfavorable. Maybe they may have exacerbated it, but to be honest, this is the situation. I really don't know what more they can do, to salvage it. We would always be in this kind of situation. Perhaps if they have a more flexible exchange rate, maybe that can attract foreign investors, but it does come at a significant cost to all of us. And it's important that we know that the simple solution is this. See here and here. We need to export more. We need to have robust net exports. We should go back to the $40 or so billion we had here, if not more. We should have higher net transfers, and this number should probably reduce. We shouldn't be spending this much on services, right? It should reduce. I know if this reduces, I think we can make do with net income. But if this reduces, or net, is it net income or whatever? Anyway, this negative here, we can make do with it. But this has to reduce. Net services, it's got to reduce, and then we've got to have stronger net transfers, and positive net exports. If we do that, I think we'll be better off, right? So that is it for this week on facts behind the figures. I hope that with these facts, I've been able to demystify a lot of things that people misconstrue a lot, particularly on social media, especially those who don't understand quite clearly, Nigeria's dollar inflow and outflow. Source for this data, the CBN balance of payment data. They have it as far back as 2008, and you can get it yourself and do your own analysis. As usual, if you got feedback, please share with me. I also have here, a bit of a recommendation. I mean, there are a lot of recommendations out there, so I really didn't want to go through so much of that. But this is basically why we're in this situation. If you're a subscriber to Nairametrics, you probably have these slides as well, so that you can maybe go through on your own. But I mean, it's online now for you, so you can always watch this over and over again if you want a bit more information. But as well, if you think that you want questions, as usual, send email to Nairametrics, info@nairametrics.com, and then we'll probably just take who knows, might get across to me. Of course, you can find me on social media as well. You can ask me questions, and I'll try as much as possible to respond to some of them. Thank you all so much for listening, and until we do this again next week, enjoy the rest of your week. Goodbye.